Hey everyone, welcome back to Better Thinking. I'm incredibly excited about today's episode because we're joined by Adam Robinson, and this conversation is eye-opening. For those who aren't familiar with Adam, he's the co-founder of the Princeton Review, where he revolutionized test preparation by understanding the psychology behind how people learn and make decisions. He's also a chess master and has spent decades in global macro investing, bringing a unique perspective to how we think about markets and decision-making. We actually had an interesting moment during our recording where we lost connection, but in classic Adam fashion, he turned it into this brilliant lesson about preparation and risk management, something that perfectly illustrates why he's such a valuable voice in this space. Throughout our conversation, Adam breaks down everything from the psychological reasons why most investors struggle to match the returns of Warren Buffett to his fascinating insights about how AI is about to fundamentally change trading and sports betting. Trust me, his perspective on this is unlike anything you've heard before. Whether you're actively trading, betting professionally, or simply interested in making better decisions under uncertainty, you're going to want to stay with us for the entire episode. Adam shares insights that I genuinely believe will change how you think about edge finding and risk management. So let's get started with Adam Robinson. Adam Robinson, how are you, sir? Thanks for joining me.
I'm spectacular.
You look it with that view that you've got going on behind you. That's not too bad, not too shabby there.
Well, it's a view you get to enjoy. It's behind me, so I've been told it's a great view. Yeah, I'm in Dubai at the moment.
Very nice, very nice. Some business going on there, or just for
Yeah,
fun?
more in Abu Dhabi actually, but Abu Dhabi is sort of, think of Abu Dhabi as New York plus DC, and Dubai is like LA and Vegas.
And Miami.
Yes, and Miami. Thank you. You know what?
A little international flair. Yeah.
Yeah. There we go. Yeah. So anyways, I'm here. Yeah.
Well, we appreciate you being actually here with us right now. Listen, you've had a fascinating life, fascinating career. Continues to be fascinating. But when I reached out to you initially, I brought up chess with you. Now, you're a chess master. Is that correct?
Huh?
And I was asking about chess and how it could be an analogy for life. And you quickly shot that down. What's your reasoning behind that? Because we often hear that, right? Don't we also often hear, it was a chess match. We hear chess brought into anything that that you have to think a couple of steps ahead.
Well, so that image was actually a Cold War image fostered by the Russians, who promoted chess as proof of their cultural and intellectual superiority to decadent Western culture. And so chess, I guess it's worth saying, because there are lots of interesting things we can segue from this over to AI and things and trading, so chess in its current form is about 1,000 years old. But because also it's a battle, a war, it has all that, the art of war and all those kinds of analogies. But the problem is, even as a metaphor for war, is you see the complete board. I see exactly what you see. There's no, you can hide your thinking to a degree, although I can infer it from the kinds of moves you're making. But we both see the same board. It's not, and the value of the pieces, is not going to change from day to day. The value of a knight or a rook or whatever will vary depending on the position. But to you and I, when we're playing the game, rather to you and me, it's not going to change. We'll see it. We'll both agree on that. So in other words, you and I have complete information and the value of what's going on, and your agenda and mine are pretty much set, right? And so, which is not life at all. life is messy. Life is, I mean, you and I, before we got on, we're talking about the replicability of studies, and in human beings, they're all messy and, heck, I'm not consistent 1 minute from the next, and I guess I'm consistently inconsistent from 1 minute to the next.
Well, we were talking about that. It's actually, as you were talking, that I thought the same thing of our conversation before we went on, and how it's very difficult to replicate these studies, and more so probably in the social sciences and even economics, which you know something about, right? It's very difficult.
Well, which goes to the difficulty of, because I know the focus here is markets, trading, investing, that sort of thing, which is really about life, actually, because in markets, we're investing money, and in life, we're investing our time, right? A very limited resource. But to go back to chess and investing and replicability is that, so the world is very messy, right? The value of things is got variables that you and I, there's no way we can, consider all those variables. Plus, things change. You have incomplete information. I have incomplete information. If you and I are on opposite sides of a trade, I have no idea what you know that I don't know, and vice versa. I also have to take into account, and this is something chess masters do, is what if my thinking is incorrect? I can see the board, but I don't know if my thinking is correct. Plus, so I say plus, I don't even know that I'm going to be seeing the board correctly. Now that you think, but it's like 3 to 5 square feet in front of you. It's not, how can you possibly miss anything? And I'm telling you, it's astonishing the blunders that the world's greatest chess players can make. Something that a 10-year-old who's just learned the game would look at the board and go, but doesn't he realize he's about to get checkmated? A world champion. That it's incredible what your focus on this or that can do. So this is all reasons why chess is not a good analogy for investing. Really for anything.
Interesting. Yeah, no, it's interesting. If your focus, you talk about focus, we could all get in that, right? I think obviously we all do, where, well, the study where they have a video and they ask you to count how many times the ball is getting passed around. And while that's happening,
that's a
gorilla
misleading
comes in.
Study. That's a
Okay,
misleading
go ahead.
study.
Tell me why.
The reason, it's a famous study of, where the object of study are told, watch this video and count how many times the ball passes between the hands of people. Now, during this game, basketball players, right, on a basketball court, and they have a guy in a gorilla outfit walk across the screen. And many of the people who do the study don't recall seeing that. But it's an artificial study because you were already directed, focus only on the number of times the ball is. If a hummingbird floated through, if Margot Robbie walked across the screen, like you're counting the number of times, you were told to do that. So, so it's an artificial study. It's not a good study. It doesn't show what it purports to show. But your general point is right about you focus on one thing and you can miss a lot of other things going on. That for sure is true.
Yeah, I mean, I know we know this from just if you look at eyewitnesses to a crime, how they're really not all that accurate all that often, where they don't necessarily always know what the person was wearing. They'll get the color of the shirt wrong, things like that.
Well, this is something each of us experiences every time we've ever gotten to a traffic intersection, and there's a cop there directing traffic, and it is clear to everyone at the intersection the cop is doing an awful job, right? Because we can see, we actually have a better perspective waiting to be directed, okay, your turn, you can go. And the cop is clueless. Because he sees just a very limited whatever, and there's no critique of traffic cops. They're doing the best they can, right? But so it's important even within trading, right? That you know what your focus is, and to be aware about stuff that might be outside that focus but would impact the trade.
Yeah, well, how do we you talked about this with where you were kind of setting it up there with chess and having the incomplete information. Now in chess we do have complete information because we see the whole board. The difficulty with trading, and I'm also involved in the Sharp app, which is a sports betting app, so I do professional sports betting as well, which we did speak about.
We got to go there. Mm-hmm.
And we do have to go there, and they're really similar in a lot of ways. Because in the betting world, you're dealing with a market, as we're dealing with whether you're trading stocks or currencies, or I was in the currency world in my last life. And you're right, you're dealing with incomplete information. But talk to me about just the mindset of where not a lot of people are able to handle that, where if you're playing a game, I'm kind of seeing where you're coming from here. If you're playing a game, it's more comfortable in that I could see everything in front of me, whatever the game may be. It's hard for people to really throw their money in whatever the market is, or even a business or anything like that, with so many unknowns, and to just say, you know what, I trust my instincts here or my analysis. Are you tired of chasing losses and following touts who disappear after a cold streak? Well, we've all been there, burning money on bets that seem like locks, following so-called Twitter experts with fake records, and wondering if anyone actually makes money betting sports. Well, that's why we built the Sharp app, a premium sports betting intelligence platform that's helping our members consistently find edges and make more informed betting decisions every single day. Our Proptimizer is trusted by thousands of verified users in our Discord community who openly share and track their success. No hiding, no deleting tweets, just real results you can verify yourself in our active community. Sharp app gives you professional grade tools designed specifically for Prize Picks, Underdog, Sleeper, DraftKings Pick 6, No Vig, Parlay Play, Hot Streak, and Fliff. Download the Sharp app today at sharp.app and use code THINKING35 for 35% off your subscription. That's sharp.app and code THINKING35. Stop gambling, start winning with the Sharp app.
Okay, so you saw my scrunch up my face when you said instincts.
I knew it was a bad word when I said it, but go ahead.
But also, part of becoming a great bettor, a great trader, and the thing is, there's that great book by Annie Duke, Thinking in Bets, right? And really, any decision, in a sense, is the bet. When I get up out of my chair and lift a foot off the ground, there's a bet, pretty good bet in my experience, that when I put it back down, that it will be greeted by solid earth. There's a pretty good bet. I'm guessing 99.99999, right? Now, there, in terms of betting, when you're betting, it could be whatever the game is, poker, blackjack, sports betting. There are all these variables, and you have to calibrate around all these probabilities, right? And I use the word calibrating, because that has a machine-like precision, right? Calibrating, and to get good, to last in the game as a sports bettor, as a day trader, as an investor, you have to calibrate really well on the probabilities, right? And then you adjust your bet size accordingly, right? That's why it's really key. And so if you're over-calibrated, you're going to be your bet size is going to be too much because you're more confident than you should have been, right? And then always within that, you have to factor in, and Charlie Munger and Warren have spoken a lot over the years about misjudgment. My thinking, has it been accurate, and the possibility I've made a mistake, right? And again, in sports betting and things, I have no idea what you know and what others know, and so you learn to calibrate around the size of. You learn to calibrate on how good you are. Am I overconfident or underconfident? And then to learn to recalibrate. This is so key. For example, when a meteorologist says there's a 30% chance of rain today, what he or she means is, if you look at all the times I said those words, 30% chance of rain, you look at all of them collected, you will discover that 30% of the time there was rain, 70% not.
But you know what happens if it does rain when they say it's a 20 or 30% chance of rain, the public is outraged and they say, well, it wasn't supposed to rain because you said it was only a 30% chance.
Well, that's
right. Right.
Yeah,
the average person doesn't understand it.
Well, the average person doesn't understand probability. And heck, not just the average person. Doctors don't understand probability. Now, why do I say that? That's a very big deal, because the doctor will make a diagnosis with no calibration around odds or anything. And it doesn't matter whether it's a doctor, like a medical doctor, or a psychiatrist. Certainly, you will never hear them say, okay, well, based on the test results, there's a 27% chance you got disease A, a 15% chance B, and the balance C. And then, so we got to calibrate around I could be wrong. And the thing is, the fact that they don't say that means they're definitely wrong. Because it's more or less, and this is why sports bettors and traders who last and get good learn really well about probabilities and, I overbet. And then, and you and I know this too well, there's your emotions, right? Your emotions kick in like, this is the sure thing. I'm going to override all prior rules because I'm going to make a fortune on this trade, right? Or FOMO or something. And so, again, this is something you make a big deal of in your training when you work with your clients, and is learning to get a grip on those emotions. So that's another, layer on top of all this.
That's one of the more difficult aspects of trading or of being a sports bettor, which I kind of go hand in hand, is the emotions. And you said something key there where you've got a model, or you've got some sort of a process, right? When you're trading, how strict were you to following a process?
If you don't have a process, you're not going to last, which is why I scrunched up when you said instincts, right?
Right. And I caught myself when I said it.
Yeah, of course we did. I mean, you and I know it's right.
You knew it.
And so see, and even instincts, when you know that this is the way to tell on instincts is a feel that something is askew, something is off, which is a sign to remove the bet, not to double down on it or something, right? Once you know that something's off, something's not right here, or the regime has changed. There's something going on either in this game or this the price action on a stock, whatever it is, or gold, whatever you're trading, meme coins, something's off. I got to pull back, reduce bet size. The key thing is Buffett's the secret to investing is don't lose money, and rule number 2, don't ever forget rule number 1. And people say, well, thank you, Warren, for that insight. I'm not trying to lose money. But if you think through that, it's your whole process about betting is minimize losses. That's not what people do. They're trying to maximize the gains. They overbet, and And you got to stay in the game. And you and I know this. It's an easy 6 to 12 months when you start just getting the ropes. You're not even a beginner yet. Like you're just beginning to, you know, and so many people enter, whether it's sports betting or, trading, whatever it is. Oh, they jump in both feet, into it's mixed martial arts. Good luck.
Do you feel like if someone is jumping in, there's a big difference between paper trading and live trading?
Oh, yeah. Well, the difference is thinking that a weekend game of paintball with your buddies out in the woods is going to get you ready for real combat. Oh, yeah. Good luck. Because when a real bullet is flying by, it's way different from, paintball. Damn. Very different, the stakes. So in fact, there's a really good point you make about, trading or betting on paper versus, the real thing. It's not, I'd say it's hugely misleading. What you'd have to do if you really want to put stakes on it, I know how to put stakes on it to make it real, is to have your trading and betting witnessed by someone you really want to impress, right? Whether it's a mentor or your girlfriend or boy, whatever it is, right? Then all of a sudden you'll discover because now your ego's on the line and you can't go, oh, you just lost half your money. If you're paper trading, you can lose half your money in a day with total equanimity. Like a Buddha smile, like, oh, I lost half my money. You wouldn't be smiling if it was real money was at stake.
What I see people do when they day trade, when they paper trade or even in betting,
Sure,
is they lie to themselves. Well, I would have gotten out there, on the trade. I would have entered right here. Like they lie to themselves, and you're only lying to yourself when you do that. But I think it's a common thing that people do. And when you're actually putting money up, like you said, the emotions change, and that feeling of anxiety of either missing out on the trade or staying in too long or cutting your losses or cutting your win too short.
Yeah, but see that right there, that betrays how naive the beginner is who thinks I would have done X. No, you wouldn't have. And an experienced trader go, oh no, you wouldn't have. You would not have done that. And the experienced trader, the trader who's gone through all that and survived with enough capital to, continue in right. The goal should be to get through that first 6-12 months, not having lost a lot of capital, and actually learned a process, a replicable process. Like, for example, here, try this. This is an experiment your people can do. Just set any kind of rule for yourself on any given day. For example, whenever I walk past my the refrigerator, I will do 50 push-ups or 10 push-ups, whatever. You just make it, it's some arbitrary thing. It doesn't even have to be hard. Like I will count to 50 every time I hear the word trade. Yeah. Some little arbitrary thing. And then you'll discover that you override that rule all kinds of times. Like you'll go, okay, I know I should have done 50 push-ups because I walked past the refrigerator, but I'm in a rush right now. Like all those things, and to observe how you rationalize, because that's what you'll do when you're trading. You'll have some rule. Okay, I don't have to put an actual stop loss in. If it hits that point, I'm out. Right?
The mental stop loss.
Right. Or I'll risk $1,000 on fantasy football, right? This season, whatever. And if I go through that, that's it. Not a penny more. Oh, yeah. Good luck with that resolution. But to observe yourself and to notice the self-talk that kicks in. Really, because trading or sports betting, any of these, is all about learning about yourself. Is really what it, at the end of the day. Uh, it's just a vehicle to learn about yourself. It's self-mastery. I don't care what, these things. And the feedback is instantaneous. As opposed to being a doctor, you don't get that kind of feedback, right? Or an accountant. You have no idea whether you're like, how good a job you did today. You have zero idea. But a trader, a sports bidder, oh, you know real well, right? Because you see the results.
Because of that, don't you have to have a way to just kind of regulate your emotions where you're not overly excited on the good trades or the good bets? And likewise, you just can't get overly down on yourself when things aren't going your way.
If you Bruce Lee famously said, one of the most important lessons to master is the ability to remain calm. And that's, to your point, that's the kind of stoic attitude. Like, I'm up 37% this morning. To treat that with total, if you have a process, there's nothing to get excited about. That's just the result of the process, right? And so, because on another day, you're down 4%. That's okay. It's part of the process, and which goes back to the 30% chance to rain today. If it rains and I said there's going to be a 30% chance, I would go, yeah, whoa, I nailed that today. Like, come on, it's just your process. What's there to be excited about? And yeah, and to have safeguards to recognize that I don't care who you are and how long you've been at the game, right? Warren Buffett and Munger still, well, alas, Charlie no longer with us in this realm, but it said they're still learning. One of my favorite quotes along those lines, this is like 1986, and Kurosawa, the Japanese director, one of the giants, famous directors, was being given a Lifetime Achievement Award at the Academy Awards by his two biggest fans, Spielberg and Lucas. That they were like, oh my gosh, we get to give this to Kurosawa, right? Anyway, he says through a translator, this is the guy, he's like in his 80s. He says, I don't believe I deserve this award because I'm just beginning to get the hang of this directing thing, right? And this isn't false Japanese modesty. This is that's false modesty. This isn't their cultural thing of not to brag. He really meant it. I'm just beginning to get the hang of it, but I'm going to accept the award as an inspiration that one day I might actually deserve this. But right now I don't. And, it's funny, the experience, like you and I have been around the block, the experienced traders and bettors, they know how hard it is. So the humility comes from, oh boy, it's the young ones, and you can even have lucky streaks that last a decade. There were a lot of those guys, they made a fortune betting tech stocks when the NASDAQ was on this tear. And then they lost it in 22 when Putin invaded Ukraine. Interest rates went through the roof, and all of a sudden, people were buying on oil companies, right? And going along wheat and shorting the heck out of tech stocks, right? They were large fund managers who had made billions on them over 10 years and lost it all in a year, all of it in a year. And I'm not going to, there's a famous tech investor out there. I'm not going to mention the name, but I think most people would know who she is. And she's lost money for her clients because at the beginning, developing the track record, she didn't have very much. Then, all they're doing is riding up a tech boom, and they don't realize that their skill is nothing more than jumping on a wave that you're just surfing that wave. you don't realize. You think, oh, I'm a genius, a tech investor. But when that wave goes the other way and is now going accelerating to the downside, and now you got a ton of money, you've actually, at the end of the day, lost a ton of money for your clients. I mean, a lot.
It often seems like whether it's the entire market or a sector or whatever it is in trading, when it goes south, that happens a lot quicker than that ride up. And is that just a psychological thing because the market is made up of a lot of people?
Well, so yes, that's a great point you make. It's a bit of both. There's an asymmetry to, I don't like this word, a bull market, but there's an asymmetry to that and bear market. So I don't like those terms because they cloud what you're actually seeing. But movement to the upside is very different from movement to the downside. Very, very different. So they're not opposites of each other, right? They're not whatsoever. And so the way to think about it is this: that so I'll use the phrase a bear market, like when things are going south for a prolonged period of time. It's So it's going south, and then you'll have these sharp short covering rallies that punctuate it, and then a slow grinding back down to the downside. Whereas bull markets are the opposite. In this sense, they're opposite. They're slow grinding up every day, like another 2%, 1%, 0.5% here, but just day after day. And then the downdrafts, kaboom, are really sharp. And then goes back to grinding, relentlessly higher. And then there are markets that can go exponential, right? And go crazy like that. So to know the difference, the asymmetry of what you're dealing with, and bear markets are notoriously tougher to handle. I don't care who you are. Than bull markets. But there again, also, you as a trader to learn, you know what? I handle the bear markets really well. Like that's where I shine. I'm going to actually increase my bet size when I'm shorting, and I know how to handle that. That it just works for me. I do really well. In the same way, a basketball player's got to know you better in the 3-point zone, like 2-point, whatever. Where's your edge? And which goes back to knowing thyself, right? You gotta know you have to know what your edge is. And I don't know if you should edit it out, because what we just experienced was something bettors have to, let's just say bettors than traders, we just mean traders, okay?
It's all one.
It's all one. My phone died. Now notice, I didn't plan for that contingency. I should have thought check my phone battery before I hop on this call. I didn't. Now that I didn't have a process, because not like every day I sit with you and doing this. So to even there, that's part of knowing thyself, contingencies and everything. So there, you and I.
Well, it's interesting. I'm glad you said that, and to keep it in, because that is so very true, because there's so many things that we do, just even very small things that can be big things, that if we're trading or we're betting, and we'll say trading, and kind of lump them all together. But there's so many things that will pop up that you just you didn't think of when you were building your little model or your process, that you continually have to add to your model and process.
Exactly well put. I was going to jump in and say you have to add. So that's you and I, again, old timers. This is exactly how we think. We go, I have to update my process and add in check the power supply before I start trading today, because don't want that to go out again, right? Or what happens if there's a flash crash, right? And what happens if I can't get fills? That happened with Robinhood and a bunch of these things could go on. Oh, good luck. You just lost 20% today. Should have looked at the fine print in your, when you agreed to trade on our platform. So But to go back to Buffett and Munger, and you said that most people, their investing style would be better suited to Buffett and Munger. Well, wait a second. Oh wait, the reason no one's ever duplicated their investing success is it's the hardest kind of thing. You have to deal with them. You have to deal with like 50% drawdowns. Total calm. And most people don't. They've done studies that replicated studies that, let's say you've got a mutual fund, whatever, or some, somebody you follow and you invest with, their annual returns are 14% a year, compounded. You go, oh, great, I'm going to get that. No, what they've discovered is people don't, because what they do is they go, oh, I'm going to follow John. He's really good. He gets 14% a year, but then the market goes down and I dump my shares. Whereas you, the turtle, you're in there earning your buck. Okay, just ride this out, just like Buffett and Munger. So investors in those funds, they jump out exactly when they should be, dollar cost averaging in or whatever. And then they wind up staying. In other words, they buy and sell at exactly the wrong time. So they don't get the 14%. So to be a Munger and a Buffett, you need to have emotional, just where you just go, it's just the nature of the beast. I just got to ride that out. And which is another thing, people say, never trade with more than what you can afford to lose. Give me a break. Oh yeah. Cause that's what people go in. Oh no. What's really stupid about that advice is 98% of people trade with way more than they can afford to lose. So that
they invented margin for a reason.
Yeah, but exactly. But even when they say that, don't trade with more than you can afford to lose, the person saying it, and I know you're going to ignore what I just told you. But to go back to the point behind that is, you just kind of learn in the same way that we learn in life. We learn, oh, I'm better in social situations where it's one-on-one, or you learn you're a morning person, right? Like, oh, okay, I'm got more pep. Better not be signing contracts at 10 in the evening, or negotiating when I'm tired. So, which goes back to that earlier thing about just knowing yourself, and then and each new day or each new experience, I got to recalibrate, add another rule to the process, and
it's funny because when I first meet you, you almost seem like a guy who kind of lives by the seat of his pants and kind of does, you see an opportunity and you're going to go run and grab it, but you're really, are you more of a systematic type of a person where you've built systems?
And even for sure, very systematic. And I might opportunistically see something, but then I'm going to, even that has got to meet certain criteria that even in the choosing of my opportunism and what I'm going to say yes to or not. And there's an organic theme, actually, that kind of unites, even though much of my life looks very different, from developing systems for taking standardized tests, or then looking at markets or AI in the 90s, where I was all.
Well, people may not know that you started the Princeton Review, right?
With a friend,
one of the founders.
With a friend, yeah, many years ago.
How did that? I assume that was some sort of was that like a puzzle that you were trying to solve?
Well, so yeah, and by the way, thank you. This is really important, because you just triggered something. You've triggered many things, but for your listeners and your clients, is you only need one edge. You don't need a big insight into whatever it is you're doing, and you can make a fortune creating one little insight that nobody else has. or starting a business. Here, Domino's Pizza. We're going to get you pizza in 30 minutes or less, or it's on us. So that was based on the insight. When people want pizza, they want it now. And they don't care so much about the taste. It doesn't have to be brick oven, fancy pizza. When I want pizza, because, there's a game on, and I want pizza with my friends, then I want it now. And that insight, now. So whether you're starting a business or trading, or you only need an edge, and then the discipline to stay within that edge. So Domino's Pizza is not going to do brick oven Domino's Pizza. We'll get you that in an hour. Oh, then you just ruin your business model. Don't stay within that, right? And so, don't want to lose a train of thought here about process. Yeah. SAT. So I didn't set out to do that. So I just gone to Wharton and got a law degree at Oxford, and I come out thinking, what'll I do with my life? And I thought, I know, I'll be a writer. No, that's what I thought back then. But I had to support myself, and I'm saying this for a reason, even not to talk about me, but your listeners, about having an insight that you can then run with for betting or trading. So, so I thought, all right, how to support myself? And I thought, I know what I'll do. I'll tutor kids. I just thought that would be easy. And I didn't know whether there was any market for it or anything. And in fact, back then, when I started, there wasn't. There was no market. I was about to start a market. I didn't realize that. And I thought the SAT would be easy because it'd be the same thing for everybody. I wouldn't have to. I thought I'd have a couple of students a day, and then I'd write my great American novel at night. That was my plan, such as it was planned. Anyway, my very first student, I still remember her name. I remember her whole name, but just Joanne. And mind you, I have no clue what I'm doing. I've never done this before. She's my very, very, very first student. So my experience in tutoring was nil, zip. I'd never done it before. And so I said, let's begin by grading the practice test I gave you. Mind you, I'm just saying this to buy myself a little time, because I have no idea what I'm about to say, right? And then her parents have hired me as a tutor, and I'm a quack. I've never done this before. And but I noticed something interesting, which was she got all the easy questions right, and the questions are arranged in order of difficulty. She got every single one right. And she got every single medium question right also. But she missed every single hard question, every single one. Now, this is what was odd. There are 5 choices. She crosses off choices A, B, and C. She gets it down to D and E. 50-50 shot, right? She was getting every single one of them wrong. And I'm thinking, again, I'm trying to buy myself a little time. I know, you get the same scrunched up face that I have. I said, Joanne, I'm looking over your hard questions here. You're batting 0. And I noticed that you crossed off A, B, and C, or whatever. You cross off 2, 3 choices. You should be getting half of these right, just closing your eyes and picking one. I said, whatever you're thinking is actually leading you away from the answer, because you're batting 0. Not 40%, which also would have surprised me, but she was batting 0. So I said, could you, again, I don't know what I'm doing. I'm just buying myself a little time to have something intelligent to say. She says, well, I cross off the ones that I know are wrong. I said, good. Then what do you do? She said, well, I pick the one I think is right. So I blurted out, look, you should pick the one that you think is wrong. And in that moment, I went, oh my gosh, I figured out how to beat the SAT in that moment, because the questions are arranged in order of difficulty. Suppose I told you that the first third of a season, home teams have a huge edge. And in the backstretch, the final third of the season, home teams do very badly. Let's say you go, oh, I know exactly. I'm going to use that. I can monetize that information very well. And so it meant that the answer on a hard question couldn't look like an answer. It had to look like there's no way choice D is the answer on this question. Can't possibly be. In fact, on a hard question, the ones at the end, that's exactly what the answer is. It's the one everyone's going to look and go, oh, the one thing I know is it's not D. That's your answer. And so that was my first insight. And the same is true on an easy question. Sometimes you get stuck. I'm like, oh man, I can't believe I'm missing number 3. I have trouble. You know, the answer has got to look like an answer. That's why it's at the beginning. So that was my first insight. Like, oh, I can use that. By the way, the same kind of, in a sense, it was vetting. It was no surprise actually coming out of Wharton that I would think like this. And just also about vetting and calibrating. The answer on a hard question has got to look like a hard question. It has to look like a hard choice. It just eyeballing it, which means if you think through your analysis on a hard question and the answer leads you to a simple looking choice, you know your analysis was incorrect. Shouldn't have led you to an easy choice. And then you got to calibrate, like, am I more likely to be making an error or to override this rule? Which, by the way, so think of me as Mr. Miyagi. I've got this new wax on, wax off move, and then the crane kicky move, and I developed all these things. But then the hard part was I developed psychological teaching techniques to make sure they used the techniques. Crane kicky move for Daniel is not going to work at the California State Championship if he doesn't use it. Right? Mr. Miyagi's just on the sidelines. He can't say, Daniel, now's the time to do that crane kicky move. Right now, buddy. So, again, which goes to psychology. I had to show them the right way. Then I had to develop techniques that ensured they followed the techniques. So that was, I would say, more of my effort actually went into that nobody ever knew about. You, the student, didn't know that the drills I gave you were psychologically engineered to induce a certain emotional state. So when I give you the new technique, you're going to go, oh, I'm going to use that. And it had all been tested and worked out rigorously. Oh my gosh, the big data analysis.
So you weren't flat out telling the students, hey, when you get to these hard questions.
Wait, that's not going to.
That wasn't the answer.
Oh no, wait. That's the easy part. I could tell you what to do. You're not going to do it. Especially when you're nervous on a test. You'll go, okay, I know Adam told me to always do this, but look, I got to do this. So I had to develop techniques when you were in the room alone. I was not there with you. So, and even then, I created, and there's no way anyone knew about this, not even our competitors. We map the techniques to your psychological profile so that actually the problems that you as a student got within the courses might have been very different from someone else in the classroom right next door to you. They have a whole different, their psychological issues. I don't mean psychological issues like, for example, here's one. The most common cause of math errors was misreading the question. It says I'm reconnecting. Have I lost you somehow? Can you hear me?
Yep, I hear you. Go ahead.
Oh, it said reconnecting. It might have been internet.
Yep. Yeah, you just came back. But go ahead. You were talking about their psychological issues in the other room.
Yeah. So, for example, the most common cause of avoidable math errors in baseball, unforced errors, was misreading the question. It was the most common cause of math
You
first.
just you just touched on a very personal personal one for me. That was my mistake all the time.
Yeah, but here's the thing. I can't tell kids read more carefully. That's not going to ensure that they. I had technique and drills and exercises that made sure that you read correctly. That was the point of the exercises. And in fact, avoiding error is as important as knowing how to do the question. It's as important. Yeah, especially at the high.
How did you learn this though? I mean, because I could see this being useful, obviously in chess and certainly in trading. Did you draw on those experience? You weren't trading yet at this point, so you didn't have that as an experience.
No,
But
well,
you
I
had
had,
played chess.
but I went to Wharton. I had some sense of that, and I did a lot of work. You know, when you work for a professor, so I did some of that at Wharton, and so I have a lot of insights into things. But that was my job. In other words, I was being judged as a tutor, which became a course, and so on. I was judged on how much your score went up. It's not here. Think about it like this: Chris Rock, the comedian, he's judged on the decibel level of the laugh. If people aren't laughing at his joke, he's not doing a good job. That's his job. So really, I was doing big data analysis like before there was any name for it. Over tens of thousands of students looking for patterns like, oh, girls with a math score between this and this tend to have this kind of problem versus boys with this kind of math score. Oh, there's a wholly different set of psychological problems. I don't mean psychological problems the way people, you know, like, but I mean like impulse control or, you know, all things like that had to be addressed so that you could perform well. There's a famous, one of my favorite chess sayings is, it's not enough to be a good chess player. You also have to play the game well. Right? A lot of good being a good trader, you know, before you actually have to get good results. So it's not just what you know, it's can you actually perform in the
And can you perform when the pressure is on?
Oh, that's a whole nother thing. Yeah.
And like you said, it's one thing to have your model and to have your process. And I think we were talking about this a little bit earlier, kind of touching on it. When the market starts to go, it starts to move differently than maybe it has for the last few years. Do you have that ability to, one, do you need to adjust? Or two, are you able, let's say now the market, let's go back to COVID. You know, the market just tanks. The entire stock market is tanking. We've got this virus coming out and there's a lot of uncertainty. A lot of people, the reason markets are selling off is because people themselves are selling off. Now, I know I thought back to myself at that point. I've been through many of these, like the 97 with long-term capital and in the early 2000s with the internet bubble, and then 2007, 2008. And eventually, you know, these are going to happen. And I'll, you know, hopefully I'll live long enough and I'll see a few more of these. But I had been training myself for years at this point to say, hey, you've got to, if you're a long-term investor, and at this point I wasn't really trading, you're gonna have to ride through that cycle. You're gonna have to ride through whatever this hurt is, and it's not going to be the end of the world. And you're actually going to want to probably start putting some cash to work during this.
Here's the difference, though. Is that whole thing about stocks over, you know, the last 200 or 300 years, stocks have gone up inflation adjusted, like, I don't know, 7%, right? Inflation adjusted kind of thing. But you have to factor in the possibility that things are actually changing. I don't mean like at this time is different, but really changing. For example, the modern world is been built up on increasing population, right? That's been the sort of assumed, like we're dealing with population growth, consumption growth. But it never occurred to anyone, what happens if we start going the other way? And there's a population collapse going on. So in the United States, in Japan, Canada, Australia, every country in Europe, more people die every year than are born. You have to let that land. I don't mean the growth rate is slowing. I'm talking about there's no growth. It's shrinking. And in the States, it grows a bit because of influx. But the only regions of the world that are still actually experiencing growth, population growth, are Africa, Middle East, and certain countries in Southeast Asia. That's it. Everyone else is shrinking. And the thing about shrinking is it takes 20 years plus at least. So if things changed today, we still have another 20 years worth of shrinking left ahead of us, because it takes 20 years for somebody to be born to have to reach childbearing ages. So the demographics are written in. We're dealing with easily 20 years of continual shrinking in the world. It's not going to change. And it's accelerating to the downside. So the idea of growth, I'm using air quotes to be snarky for a reason. You will hear economists, oh my gosh, is it going to be a recession like this year? Wait, what are you talking about? Those words. A recession assumes a growth path, up a couple quarters of decline, and then we go right back to our growth curve, right? Or maybe 2, 3, 4, 5 quarters, whatever, or 2 years. And then we go back to the growth curve. Oh, what happens is actually now, for the next 50, 100 years, it's actually going to be going the other way. And if you look back over centuries, you discover these periods where things are not going well for 50 to 100 years. And so even riding out these downdrafts, it's very possible that we're in a completely new paradigm. When you studied economics in college, I remember doing that at Wharton. I don't remember discussing negative interest rates ever.
No.
Hey, imagine telling students there's going to be a time when borrowers get paid to borrow money, and lenders have to pay for the privilege of giving them the money. You'd have laughed and said, "Oh, give me a break. How could that possibly happen? That's ludicrous." And yet, we saw it. We saw it in the modern world. We saw it Japan first, then Switzerland and Germany even. Negative interest rates. You get paid to borrow money. Oh, good. I want in on that one. Pay me to borrow money. I want in on that. And so, given that that's the world we're in, all bets are off. You're talking about recession within a world where we have negative interest rates at times. Oh, this is the way to think about it. The world now it's Alice in Wonderland. That's the way to think about everything. Now, within sports, it's probably the same in the sense of baseballs are going to change. What's one of the beautiful things we love about sports are just not going to change, right? Pitcher's mound is where it is. And by the way, when they do change, it's to make things more equal, right? They'll move the pitcher's mound like a couple inches back because batters are getting too good relative to the pitchers, right? They'll tweak the rules a little bit to equalize things, right? And even within basketball, right? They'll sometimes tweak the rules, but once they're tweaked, okay, it's going to be like that for the next 20 years, whatever. And so, again, this is the process of knowing what can you count on and what what can't you as a trader? But I'll tell you something, if you're a day trader and whatever your thing is, I trade the opening hour trading range. That's my thing. I do that really well, and even I trade the opening hour trading, financial stocks, right? You can get like whatever it is, that's my thing. Whatever your thing is, right? That's my edge. That probably is not going to change in the same way the whole market did. Could. And even if it does, here's one, for example, crypto is traded 24/7. Well, stocks aren't. A lot of markets aren't. Forex hadn't always been, but now via crypto, all of a sudden you can denominate crypto in yen or Canadian dollars or US dollars, whatever it is. You can pack even oil. So that means all of a sudden Forex now is traded 24/7 via the crypto markets. So the crypto markets introduce changes that affect markets beyond crypto. So all these things kind of got to layer in.
Well, I have one other thing because we didn't touch on it, but I do want to touch on this quickly. You've also got AI, which you mentioned earlier, but we didn't bring up now. Now, how is that going to change trading?
It's going to change everything. So in 2017, Google's DeepMind. DeepMind was an AI company acquired by Google. But in 2017, this DeepMind hadn't been acquired yet. Brilliant guys over there. And the guy who started DeepMind, one of them, is a chess master. And he said, what if we give AI the rules of the game of chess, but we don't give it any human games to train on? So before that, the best chess programs had been trained on the best human beings. Made sense. Why not train on the best? Yeah. And back then, the best chess programs were significantly better than human beings. Like they would crush the world champion Magnus Carlsen, who's one of some say the greatest. I still think Fischer was better, but
you're a little biased though. You knew Bobby Fischer.
I knew Bobby, but still, and so Magnus Carlsen, truly one of the greats. He's one or two, like easy. Anyway, the best chess program back then, if he played a 100-game match with that chess program, which is known as Stockfish back then, he'd be lucky to get one win out of 100 games. He'd be lucky. If he got one win, yay, 1 out of 100. But then Demis said, what if we just train the AI, we just give it the rules? And so in 4 hours, this program had played millions of games against itself, each game getting better. On no human games, it didn't see any human games. And it leapfrogged all existing knowledge of the game in 4 hours. All existing human knowledge of the game built up over 1,000 years, duplicated by an AI machine in 4 hours, but then it leapfrogged it and discovered things human beings had never thought about before. And so it plays like alien chess. It most of the time, like 5% of the time, you go, wow, it's so much better than any human being. It makes total sense. But then it starts making these alien type moves, and you go, oh, there's no way it could get away with that move. And then 4 moves later, checkmate. You go, wait, how did that happen? And so the AI program, without any human biases, discovers things that human beings had never seen before, had never thought of looking for. And so that program right now could have beat the old program. I mean, it did something like crushed it. Like like in a 100-game match, it had a plus score of like 27 wins and 73 draws. It crushed and that other program was way better than human beings, right? So AI and trading. Now, what happens if we just let these bots just do their thing and learn from their mistakes? They'll discover things that, and so part of the problem, like LLM models, those kind of existing models, the AI trained on human beings, why would you want to do that? Why not just let it kind of discover things on its own? And so it's a matter of 3 to 5 years before trading programs would crush any human being, like probably already pretty close to there. I mean, on all domains across the board. Imagine you're going into sports betting, you're up against these AI programs. Good luck. They're going to have such an edge on you. It's just, and with no emotional bias or anything, right? And so then what happens it becomes the bots playing each other, right? And then there's going to be, some alpha, like the best of them all, right? But that's going to happen in stock trading. It's going to happen across the board in everything. And then where are the opportunities? It's almost like entropy, where it'd just be this fixed. There's no way to get an edge anywhere. Where it was Mark Twain who said, it's a difference of opinion that makes a horse race. There has to be somebody thinking it's going up and somebody thinking, I think it's going down. I mean, that's simplistic, and so what happens when there's no difference of opinion? Because the best opinion has been, like these bots are out there just like, this is what the price of gold is. It's just what it is. And it'd have to be some major change out in the world. And I will instantly discover it and recalibrate around gold. That's it. So I think there's going to be, the vol is going to shrink down to like, that's why I said entropy. There's not going to be any vol. And I think that's 5 or 10 years away, max. And
yeah, I mean, these things grow exponentially quick. So, I mean, this is an exponential.
Yeah.
Yeah, it's scary. I mean, it's fascinating and scary all at the same time. But yeah, you're right. I didn't think about it I thought about that with AI, with the trading, and as you were describing it,
it's going to get there too. Whatever
no doubt about it.
You could possibly, as great as you are with your experience, a bot is going to notice that things that you've never even thought to look for, right? There's no way you could possibly do it, right? And so at that point, then it's the bots duking it out against each other. I say the bots, right? These programs duking it out. And then, then one's like, well, there's that one deep mind alpha baseball. We just can't compete with that program. Why try? And then the program's not going to find any betters to take the bets. Because all the other ones don't go up against alpha baseball. It's just DeepMind's got that locked. So we have another 5-10 years, and then it's unclear to me where even investing goes. And think about this would extend to venture capital, so many things, and across the board. So we're 5-10 years away max from that happening.
Yeah, it's scary because all investing, and I think we kind of touched on it when we first started, it's just about finding that edge. And when there is no more edge in anything,
yeah,
there's no investing.
And because there'd be no difference of opinion. Like you are going up against, the alpha, baseball or alpha day trading, whatever it is. You can't possibly win. You can't. And the emotional toll, there's a great documentary on Alpha, I think it's called AlphaGo. And it was DeepMind when they created a program, play the game with Go. The game Go, which is that Japanese where you put the stones down on the board, the black and white stones.
Chinese, I think it was. The
No,
Chinese.
no,
Is it Japanese? Okay, I thought it was a Chinese game.
no. It's a Japanese game.
Okay.
And anyway, it's called Go. And heck, maybe 2,000 years ago, it was invented in China, but it's the Japanese, like they own the game right now. Anyway, the documentary is the number 2 player in the world is up against this program, and it's worth watching his emotional horror. He's watching himself get beat by a program. He's the number 2 player in the world. Number 1 won't play the program. He won't. No, I'm not gonna. I'm kind of busy right now. But the number 2 said, "Sure, bring it on. Good luck." And to watch, and I say horror, because he's got no idea what he's up against. And you watch his face and his emotions, and it's like I'm playing an alien, and I don't even understand why I'm losing.
Well, the significance of Go is the fact that it's got infinite amount of moves.
Right. It's way harder than chess.
Right.
And
so they've always said when AI can figure out Go and be a dominant at Go over humans, that's when they've really gotten AI to that point.
And they've got there. They got there 7 years ago. And imagine where it is today. Like so much. But again, if you watch his emotions, you see a man who's just like, remember, this is the guy, the best in the world, right? Like, and then to watch yourself get beat by a program and not even understand how you lost, right? Like if you're a boxer and you're going up against Muhammad Ali, you know why you lost. Or you're up against Bruce Lee, you know, okay, I didn't see the punch, but that's Bruce Lee. But this is, and to watch like the emotion, whether or not you're interested in the game, I'm talking about the emotional and why is that important? Because the AI overlords, right, are like, it's just 5-10 years across all domains, medicine, law, and it'll be the knowledge workers that get they're toast. The legal profession, I was talking about this 10 years ago. The legal profession, accounting, finance, anything involving thought and stuff. From this point, 5-10 years, your history, not needed anymore. And now I'm not sure it will be implemented everywhere simultaneously, but it'll be real clear within 5-10 years. Oh, doctors, like, why would I even want to second guess, MD GPT or whatever it is, and then what do human beings do? In a world like that, it's coming. It's real close. This isn't science fiction. This is
right? No, it's here.
It's here.
Medicine. You can imagine if you take your, you go do your blood work. I mean, when you go to the doctor's office now in the United States, I mean, you're in there for 5-10 minutes for your regular checkup. They're looking for anything major that pops up on your blood work. Doesn't, you're on your way, and if something does, maybe they'll give you a pill for it. Now an AI is going to really dig deeper into all of your blood work and all of your other analyses that it's going to do, what other symptoms you're having, and be able to put them all together.
But the AI will know 6 months before, hey, you better start taking this medicine right now so that you don't have to go to the doctor's office. And by the way, doctors currently do a really bad job. Multiple studies have replicated this. The doctors, roughly a diagnosis, there's the 1 in 4, 1 in 5 shots of diagnosis is incorrect. Think about that. There's a not insignificant chance that your doctor who says you got X is wrong. And by the way, if you got a second opinion that backs it up, there's a 1 in 16 chance they're both wrong. Right? And that's not insignificant. So
I think when it comes to the medical profession, I think we've, if you break an arm, something that shows up easily on an X-ray, they're kind of good at that. but I think it's just a lot of guesswork with their stuff. And
Well,
I know I've from personal experience that
yeah, but everyone knows, okay, it's a broken arm. Got to set that. Like, okay.
that's it. That's an
Well,
easy one.
most things aren't like that. Right? It's not that simple by a long shot. And the thing is, right now, this is the other thing, is that the AI programs for medical diagnoses are so good, but they can't explain the diagnosis to the doctor, because they've looked at thousands of variables and have all these, these AI models and ensemble models that are checking this and that. There's no way that you can verbally explain to a doctor, this is why this is the correct diagnosis. So you can't even human oversight of these programs is impossible. There are proofs by mathematical proofs of mathematical theorems that are done now by AI that the best mathematicians in the world cannot follow, because the proof is like 10,000 lines long. Imagine a proof like 10,000 lines long. And then where mathematicians, all they can say is, I didn't spot an error, so maybe it's right. I as a human being, even though I got a field medal in mathematics, but I don't understand the proof. There's no way I can. That's what we're so close across the board on that.
It's exciting, but it's certainly it's certainly not without some anxiety as well as to where we're heading. But it's going to be interesting, that's for sure.
Actually, one last thing within sports betting and things like that, what'll happen is the fact that human AI is better than human beings at chess, still a world champion among human beings, right?
That is true.
And it's every bit as exciting, and so I'm sure that they will have ways that you can bet against other human beings and just keep the AI programs out of it, because the AI programs are not allowed to participate in the human chess championship.
Well, what I could see is the sports book saying, hey, we're going to have the AI, so we're going to set the price at the most perfect number that nobody could beat that number.
Well,
and
remember, that's not their goal,
what's
though, right? Their goal is to maximize the number of bets.
Right, but they're going to get the price at the right point where they could get maximum. They'll get action on both sides, and so they're always going to have the best market.
But it's not. They're not laying a line on the game. What they're doing is they're maximizing. This is the point at which the people above and below are going to agree on, because that's where they make their cut, right?
Well, so there's a couple of different things. So there's there's what we call sharp books, which are mostly offshore from the U.S., and they're willing to take sharp action. They're willing to take the smarter bets, but they'll take it at a much lower. So they'll start with low bets, and they say, okay, if Adam comes in and bets here, I know he's pretty sharp, and if he's betting on a number that I posted, well, we better move that number in the direction he bet. And now they'll get some other sharp people. They'll think they have it right. They'll increase the bet size a little bit. Now Adam comes in and hammers it again. They go, whoop, we had it off. And by that time, eventually, when they raise it to a point they're comfortable, they're willing to take a large bet from Adam. But what the U.S. Sports books, just about all of them, they're what we call square books, and all they're doing is basically they're keeping the sharpest bettors out of the market. They don't even want them to bet, so they'll either limit your bet size if they deem you to be a sharp bettor, or they won't let you bet at all. And what happens is they're just looking at the sharp books offshore and just replicating their line. So they're like, well, the line should be -7. We'll just take that. So they're not even making their own lines. But I could see someone's going to come up with an AI model, and they're going to say, you know what, this is where the line should be. And you could go ahead and take large bets at this number because we've got all the information, and this is the right number. 50%, they want to get it somewhere 50% on both sides. If we're talking about, let's say, the NFL, and they're going to say, you know what, at -7, we're good here. We're safe. This is going to land on, this is going to be over -7 or under -7, 50-50. And
You
that's the
know,
number that they want to get to.
it occurs to me, though, that you just said something that triggered an insight, which is this, is that the program will know the best way to trade the stock or whatever, but they won't be seeking portfolio level. They won't, because I may be willing to lose on this. If I add in these trades where I know my odds aren't really good, if I add them into the portfolio does better, even though I'm losing on those trades. I don't mind. Well, I'd like to win on all of it, but I don't mind because I know the portfolio, right? The vol is greatly improved by throwing those in. So even there may be a way to even, you're not beating the line, the AI line anymore, but you might be willing to go against it because within the portfolio, I'm even willing to take some of those negatives because it'll equal out, it'll smooth the vol of the portfolio.
Yeah. Well, that's an interesting thought, but AI is going to should be able to replicate that as well.
It won't be well, sure. I was thinking about that too, but it's not, it can't be every portfolio in the world out there. I didn't okay.
Okay. So there may be a reason for you to come in onto this trade that's different than maybe the entire market.
Right. And by the way, that's because I'm willing to lose on this stock trade because I'm going short the corporate bonds. I don't mind that I'm losing on this because actually it's a long short trade and I'm doing it across the markets. And there's the best programs, the AI could get there, but then you're looking at tens of millions and billions and whatever permutations around all that. We
could then you start getting into the quantum computers, which they have going on, which they're talking about now.
Yeah, they're pretty close on that. Yeah.
And we need the energy for that as well.
Yeah.
To get those things running. So that's a whole nother problem. But I got to let you go. This was absolutely fascinating. I loved the conversation, and I truly appreciate you doing this from, I'm keeping you from going outside in that beautiful weather out there in Dubai.
I really enjoyed myself. I've enjoyed our conversations before. So it's a lot of fun.
Well, thank you so much. And we'll do it again.
Excellent.
Thanks for watching, and don't forget to like and subscribe if you like this content.